Merhabalar, İstanbul Fintech Week 2022.
Hello.
Burada yeni bir oturumla
We are
sizlerle
here at the new
beraberiz.
session,
Creating Best
Istanbul
Data in
Fintech
Customer
Week
Analytics paneli.
2022. We're
Ben
here
Profesör
at
Doktor
Creating
Celalay
Best Data in
Şahin,
Customer
Boğaziçi Üniversitesi
Analytics.
Dijital Finans Çalışma
My
Grubu
name is
Direktörüyüm.
Professor Dr. Ceylan
Bugünkü
Shahin.
panelde misafir
I am the leader of
konuşmacılarım
Boğaziçi
Artmer
University DFG.
şirketinden Mustafa
We have
Çakır
Murat
ve
Hacıoğlu,
B2Metric
B2Metric,
şirketinden Murat
is
Hacıoğlu.
where he's coming
Hoş
from, and we have
geldiniz
Mustafa Çakır
panelimize.
from Artmer. Welcome to our
Bugün
panel.
sizlere datanın nasıl
Today, we
yorumlandığı,
are going to
kullanıldığı,
talk about
değerlendirildiği, bunun
the
bankacılıktan
data interpretation
sigortacılık
and
çözümlerine
exploitation,
ne
and
gibi
how
faydalar
data
yarattığına
creates benefits
bildirimler
for
vermek
banking.
istiyoruz sektörden.
So,
İlk sorumu
my first question
Murat
goes
Bey'e
to
sormak
Murat.
istiyorum. Görüyoruz ki görüntü işleme ve
Well,
yapay zeka çözümleri
visual transactions and AI solutions are intensely used in banking. How do you view the future of that development? AI, especially machine learning, modeling, and modeling processes automation, have brought the banking industry forward compared to other industries. Actually, when you look at reports, the banking industry has had major leaps compared to other industries. So what banks do is they collect data of customers by customers, and for a very long time they have been using AI very frequently. I'd like to talk about AutoML. I'm going to talk about data processing and making sense out of data. I would like to talk about automation. So, in Turkey and in the region, we work with finance companies, and we have automating machine learning finance platforms. What we do is we have customer analytics. We make sense out of customer movements, and we have instant scoring of risks. We have AutoML real-time data integration. So we have that for banks, and at the same time, customers have cross-sell and campaign processes. We work on automation for these processes. We also focus on proposing the right product for the right customer. And customer segmentation, of course, is something important for the banks. And banks have end users that come from different channels. Right now, almost all banks use AI for all of these. They have machine learning modeling to do that work. This is the structured data analysis that we're talking about here. So you process structured data with machine learning and you interpret that data. But we also have image processing. The banking industry, compared to other industries, has adapted faster, and it is actually the fastest in terms of adaptation compared to other industries. I guess I can leave the floor to Mustafa from here. Just like you've said, in the banking industry, you have regulations, risk management, marketing, and this is a technology that creates a lot of predictive value. And how about the reflections of that on the insurance side? Well, on the insurance side, the picture is so different when we think of image processing and also AI solutions. Here's what it is. You have an industry that has a core-to-core communication with human beings. When you are in contact with people, you have more structured data. Less structured data. Well, Murat has structured data, but the insurance industry has to work on unstructured data in order to create meaningful data. So, on the insurance side, both to consolidate user experience and to stabilize and render reliable the processes within, we have to do unstructured data. And when you do it, you use deep learning. That's a part of machine learning. And what you do is you garner most efficiency and you create most solid solutions with deep learning. And these systems have been with us since about 2014 and 2013, around that time. The technology is still novel. And the insurance industry needs to create benefit in order to create meaningful value. So, roughly, what we want is this. Let's say you want to analyze a vehicle for car insurance. You have an image, an incoming image from the field. There's so many different parameters, and you have so many different segmentations. The purpose is to have a generic image and to have the right rates. The insurance cannot tolerate false positives because we're talking about huge levels of risk in the industry at large. And that actually augments the entrance level bar. So, recently we see massive investments in R&D, especially in terms of image processing and deep learning investments. Now we have improvements in user experience with new applications and implementations, and you also have a stable set of programs where you can create added value. My theory is as follows. You need serious levels of R&D. You need to really make a lot of effort for that. However, at this level that we're in, all the companies will really reap the fruits of their investments in a short period of time. I guess there's a huge expectation because we're talking about optimization as well. Let's begin with you, Mustafa. So what are the biggest benefits out there, and what are the challenges and potential losses? Well, let's put it this way. Roughly, AI technologies receive a lot of trust and confidence. But actually, we trust the future potential of AI. Maybe we're talking about what it will look like in 10 years or 20 years. At the core of it, they're quite primitive, actually, these AI technologies. Of course, a lot of work needs to go into their development. I'm not talking about like primitive in the literal sense of the word, but compared to what we dream in terms of what we want to see, they are quite primitive. So when we try to adapt these kinds of technologies in the markets, then we see a block of resistance from users and from the industry. And the reason is as follows. We're talking about an AI application that is used in controlled environments, but when they enter the field, they come up with false positives, and you really have to be quick in taking measures. And there's a deadlock. The industry does not have the resilience to tolerate these kinds of false positives. We're not talking about a resilient industry. The biggest risk lies with the developers and industry leaders. What I see is that, of course, the technology will change, and those who are investing in this area will benefit a lot, and the biggest beneficiaries will be those who correctly manage this transition process, this integration process. So there are all these false positives, and those who quickly manage and quickly take action against those false positives will create substantial value added. And in the upcoming decade, we're going to have a more stable level of technology, and it's going to be further established. The biggest disadvantage, just like I've said, in these kinds of integration and implementation processes, there will be certain problems, but you need to know how to manage them. So there are all these false positives. You mentioned the transition process, maybe we're talking about 5 years, 3 years. Are hybrid solutions then viable in that management process? About decision-making especially. Well, it could be a short-term solution, but it's not going to fit the nature of the work. If the purpose is to fully automate this process after a certain period, you need to really move away from human beings. Because when you have people as last decision makers, you can't inspect the mistakes of the system correctly. We are processing unstructured data. And the data consistency is created afterwards. When we look at raw data, it's meaningless. In mathematics, the speaker says, for the computer it's just a matrix. You have a pool of parameters. If we leave the decision to the end users, then we narrow down the parameter pool. If we don't challenge the system, we can't find the bugs. If we can't find the bugs, then we cannot reach stability in the system. I mentioned 3 years or 5 years of transition, but that could be impossible if we don't do the right thing. Because we should reach a level of excellence, prove the excellence of these systems. We can say at that level, we were not going to need people to do that job. But if we start with a hybrid solution and leave the most important stuff to human beings, then we can't establish the system fully. I'm really not very sure about that hybrid solution. Murat, back to you. What's the momentum of automation in banking? In customer data analytics, fully automated systems are not established yet, and I think it's not going to be established in the short run either. Because you need to have a data scientist, both for data collection and also coming up with the right filters and also self-qualification. So you need to have the correct data sample with the right ways, and you have to train the system to do that work. Then you have cloud detection scenarios, we have MPL, we have risk scoring that works for both insurance and for banking. When the model produces results, these results are assessed and observed by experts, and this is a requirement because, as you know, the finance industry is largely based on money, and a loss and failure would result in a significant consequence due to data losses, data damages, or disruptions. That in real time turns into an error. That could cause a series of problems. The relevant business unit will receive negative impact, and I don't think that these people who work in those business units would want to take that risk. And I see that perspective with our customers. Yes, the used model produces results, but you need to improve that model. You also need to feed new features into that model. And when that model comes up with a result, that result should be assessed by human beings. You need to have a project to do that. So I am talking about half automated, half autonomous customer analytics. It looks like the healthiest case for us, but of course you need to have case by case assessment. You, for example, can filter and also come up with certain parameters and train the machines. And for example, if a person wants to purchase a car insurance policy, we might come up with certain predictions, and we have certain predictions about what the customer will do next month. So I guess we feel more confident with half automated systems, both in the banking and insurance industries. Algorithms vary as well. They're predictive and preventive algorithms, especially in the insurance industry. You're talking about solutions that preempt, that come up with preemptive solutions. What kinds of algorithms are used in banking, Murat? Well, generally speaking, during the customer analytics process, we have classification and clustering. These are all experimental. So you have data interpretation and data modeling. A lot of things are tested, but when you have a classification, when you have a differentiation between right and wrong, when you look at the tree structures that are used, for example, these are quite popular. But finance also has IFRS. There are financial modeling that is used. This is not really done with machine learning that much. Conventional financial models are used on that side. Actuary teams have been using boosting algorithms, but they're just on the testing phase. Up to now, they have used other types of models for risk and price optimization. I think there is a bit of a transition process. Yes, machine learning is successful, but there are many unsuccessful scenarios too in that area. However, we have AutoML systems that we're trying to set up. And that trial and error period shortens a lot, which reduces operational costs, and that means there is a higher return on investment, both in industries of insurance and banking. How does it look like in insurance? Mustafa, well, you mentioned predictions before an accident occurs. Yes, there are those cases that are taken into consideration. So there's a main problem that we have. When we process unstructured data, modeling with certain rules can be quite difficult. You can use, for example, if conditions. You can use certain algorithms. You always come up with problems. Let me roughly give you an example. Let's say you are working on a certain type of a car, you define a morphological fault, and then you receive a car. The morphological error needs to match with whatever you're receiving. So on our side, you have deep learning structures and generated algorithms, because there are certain conditions that vary and the variety of parameters will increase in the field. That's all about human nature. And then on the internal side, you have predictive algorithms, you have other algorithms. You have to really constantly adapt them into what's happening in the field. So in a general sense, one of the biggest efforts in that area is synthetic data production. So we have to come up with such modeling internally that should be worked and that should construct data, and we should use that resilient data work to adapt to the field. So there is NVIDIA, for instance. That's a GPU chip company, and they heavily invest in this area. If you research, you will find out. So simulation methods are used. So for example, you have a full modeling of a car from the field. Really, you have renders that are very true to life. Data is constantly produced on that side internally. Then we should take that data and export that data. But for that, you need to have a generated structure. So we say, take this data, there is a human face, but turn that into a black person, an Asian person, Turkish person, Arab. Then, out of a single shape, you produce 5 different types of races. So when you adopt that generative method, you increase data variety. If you multiply that by tenfold, then you almost run on a par with the variety increase in the field. The purpose here is to dovetail the variety of real-life data with the data that is produced internally. So what is the advantage that will come out of it? We're not going to need any incoming data from the field. We don't need to really work on that. We will not need to tag that, of course. All of that comes with operational costs. We will not do anything. We can produce all kinds of potential data by just modeling only. So the basic algorithms, I think, will be used with generative algorithms. Thank you. That's the end of my presentation, so to speak. Well, on top of what you said, I have something in my mind. Banking and insurance are data-regulated sectors on a very high level. So you collect all this data, but then when you also have data protection law, you can't use all the data you collect. Maybe with generated data you can bypass that and you can come up with a whole other solution. On the insurance sector, I have an example in my mind. So you might be a very good driver of the insurance, but you might want to keep that data to yourself. You don't want to maybe share that information with insurance companies, and there are also automated vehicles as well. I'd like to pose the same question to both of you, but Murat, to you first. What kind of direction do you think customer analytics will take in the banking industry? In both industries, you collect data and they are multiplied on a whole different level. So you have omni-channel data from banks. So you have data that is generated from cameras, and you have call center conversations and natural language processing as well. And you have, for example, other data coming from the customer that receives a loan from the banks, and credit card repayments by customers, portfolio data collection. And if that user makes an investment, you also get data about the activation from that investment, and you also have digital channels. Banking and insurance companies invest heavily on increasing variety of channels. So, for example, just by using a video method, they want to acquire new customers instantly. So we're talking about image processing here and digital data interpretation. All of these processes should be actively exploited. Omnichannel data in financial companies should be arranged properly, and B2Metric actually gives the right platform for that purpose. So we're actively involved in 8 industries, and mostly we have insurance industries that use that, both for car insurances and also for personal life insurances. Mustafa? Well, I just mentioned we are working more on generative structures. We invest not in the future that is about tomorrow. We're talking about far ahead in the future. Both insurance and finance industries in the future will therefore need no input from the field itself. We're going to have all of that through modeling. I believe that people will be more aware of this trend. In Turkey, specifically, when we think of the data protection law and when we look at the regulations in the insurance industry, there is a trend of conservative approach in terms of how people want to retain the data within an organization. Of course, you have to come up with a solution for that. And what we want is as follows. B2Metric, for example, has that ML studio. We want to have a real-life studio of what they use. For example, it's going to work like an open data platform. They will produce custom data, they will quickly model that, and then will pack and serve it. This work requires a huge level of experience and, quote unquote, it is labor intensive. There's a redundance of work, I would say. So also it is not really very possible for a single organization to do all the work that's required. Our purpose in the upcoming term is to render this fully automated. That's why we constantly receive data from the field, we come up with analyses, then we try to find out, for example, the grounds on which certain exploitations take place. If we model, quote-unquote, human beings, if we can generate data modeling out of that, then this structure will be generalized across the economic industries at large. I don't think that it's going to be limited to the insurance industry. A very brief question. Where does explainable AI solution stand? Well, let me put it this way. When you think of customer analytics vertically, you have AI and machine learning models. What kind of variables are used in order to come up with a decision based on the data? Well, you need to really have a lot of reports for that, because business units take these models and they assess the decisions made by these models, and they want to trust the interpretation power of these models. Explainable AI has advanced a lot. A lot of open source algorithms are developed, and we automate the reports of explainable data, and we use them for finance and for other clients as well, because what happens is there are statistical modeling processes. This comes with a behavior that's quite familiar to people. And what we do is we have explainable data on a different type of variable level. So you basically delve into the details, and customers want to see that. Again, the topic is about customers and also money at large, and you really have a high level of confidence there. Yes, in terms of end users, this ethical AI solutions are going to get way more important, because we're talking about increasing literacy, and you need to do that for a better use of financial services. I guess this is the end of our time. Thank you so much for your contributions. It's been a very enjoyable session. Thanks a lot.